larger electronic devices will be banned on certain inbound U.S. flights. That directive coming from the Department of Homeland Security today. And just in the past hour, here's how the story is broadening. Reports that Britain has announced that they will institute a similar ban. Phil LeBeau is live in Chicago with the details. Phil, tell me how this works. Tell me how this makes us safer.
Well, according to the Department of Homeland Security, this is all about the flights coming from certain airports in the Middle East directly to the United States. And the concern is that terror groups are trying to smuggle explosives on board, whether it's through laptops or e-readers or tablets. And as a result, U.S.-bound flights from 10 airports in the Middle East, impacting 9 airlines, and we'll talk about that in just a little bit, about 50 flights a day into the U.S. People who are on those flights, they will be required to check their electronics. They won't be able to carry them on board. They can still bring their smartphones and medical devices on board. Here are the airlines that are impacted. When you look at this list, some of you might be saying, I'm not really familiar with some of these airlines, but there are others that carry a lot of Americans, including Emirates, Etihad, Qatar. Those are some of the biggest airlines. Turkish Airlines you see there. All of these have direct flights into the United States, and they're restricting their electronics per the rule change from the Department of Homeland Security. That's the only way they'll be able to continue to fly into the U.S. The travelers on those flights, again, must check their laptops, tablets, e-readers. The Department of Homeland Security is not saying exactly why they've made this change, aside from the fact that they are looking at threat intelligence, and they believe this is the proper thing to do at this time. You'll notice that there are no U.S. airlines that are impacted by this change in the electronics that people can bring on board. That's because the big carriers in the U.S., all carriers in the U.S., none of them fly to these 10 airports that have been designated by the Department of Homeland Security. Guys, you see that the airline stocks are down today. I'm not really sure it's because of this electronics ban. That might also be because you have a broader sell-off going on within the market. And remember, the airline stocks have had a heck of a run over the last 6 months.
Hey, Phil, stick around, stay with us here, because we're going to dive a little deeper into this, what it means for travelers, what it means for airlines. Joining us down on our newsline is former Department of Homeland Security Secretary Michael Chertoff. Secretary Chertoff, why do you think this ban was enacted now? Do you think it's because of a specific threat or piece of information?
There may be a specific element involved, but I think, frankly, I've been expecting something like this for some time. If you go back last year, there was an incident on an airliner coming out of Somalia which had an explosion, and it looks pretty clear that that came from a laptop which had some explosives within it. The terrorists have been working over the years to create devices that are smaller and smaller with the capability of bringing down an airliner. And I'm assuming that what finally happened was we got to the point that there was sufficient credible intelligence about their capability that the department decided at this point they have to put the ban on large electronics in the cabin.
Fair enough. We all want to be safe. I mean, that's the primary concern. And this is one of those stories, and I don't need to tell you this, you've been through this a lot more, where if you criticize it, it's sort of like you're being callous against the threat of a terrorist action. That is certainly not our point. However, I guess our confusion, Secretary, is if you've got an iPhone Plus, it's almost the same size as a tablet. Why are they making this differentiation, do you think, over literally maybe a matter of an inch?
You know, this is a balancing issue you always have. And when we did the liquid ban back in 2006, after the plot to blow up airliners with liquid, we allowed 3 ounces on. Now, someone could have quibbled and said, well, 3 ounces is too much, or why not allow 4 ounces? What they have to do is they have to look at generally the size of the device. They make a judgment that over a certain size is too much of a risk. It also has to be a clear line. I mean, there are gray areas, but from the standpoint of the passengers and the screeners, you have to have a pretty clear rule. So in this case, they've made the judgment that devices over the size of a smartphone are probably too great a risk, and they're drawing the line there. But there's always a gray area in the middle.
Two quick questions. One, is this more about the airports than it is about the airlines and the security at those individual places? And number two, why is the electronic device, the laptop, safer in the belly of the plane than it is in the cabin of the plane?
So let me try to answer both. I do think it's about the airports. I mean, the significance of the airlines here is that they fly directly into the United States. So that becomes the concern of DHS. And it's a combination of screening issues. One is whether the technology at the airport allows the airport screeners to find the explosives in a device. And the second issue is screening of passengers in terms of intelligence. Do we know enough about passengers to recognize who might be high risk? And also recognize we're dealing with an area where there are a sufficient number of serious bomb makers in the region that you do have to worry about bomb makers being able to fashion something that could fit in a device. So I think that's why they picked the airports.
Michael, this is Phil LeBeau. Why not just ban all electronics coming in on any flight from overseas into the U.S.? Because the theory that I'm seeing a lot of people advance today is, well, look, if I really want to target a U.S. airline flying out of Frankfurt, I'll just go on a flight to Frankfurt and then smuggle the explosive onto that flight. Is the security that much better, maybe in Frankfurt or Paris or some other airport in Europe, or is it just too cumbersome to try to make this across the world?
I'm speculating a little bit here, but I think the issue, and again, it's always a balancing test. There's no way to have no risk, but on the other hand, you do want to get the material risks. I would say that if you get into Frankfurt and you smuggle it in the belly of the plane, you're going to wind up getting rescreened if you get to the baggage, because you'll have to leave the security area. So at that point, you will be screened at Frankfurt. And that means there'll be whatever the technology is in Germany, coupled with the fact that on that flight, any information about a passenger that's high risk will be available to the authorities. So again, the judgment is that the higher risk is if you fly directly from the region that's been named, but if you have to transfer and get out of the security and go through it again, that's going to reduce the risk.
Last quick question, Mr. Secretary, and that is, what is to prevent, I'm not a bomb maker, obviously, neither are you, but if you have several phones, brought onto a plane by several different people, who's to stop a terrorist from stringing those together to have that same critical mass as a laptop would?
Again, to use the example back when we did the liquid ban, and we run experiments on this.
Right.
You could argue, well, if you had a bunch of people who brought 3 ounces on, you could combine them together and make a big explosive. But as a practical matter, it would be difficult to start to do that in an airplane without people noticing it and intervening. So, again, recognizing that we don't want to go to the point of, being too extreme in preventing people from bringing anything on a plane. The judgment is that operationally, the risk of combining small devices together and actually being able to have an effective explosive is significantly less than having a single device with enough explosives in it.
Michael Chertoff, thank you very much. Phil LeBeau, thank you very much. Just quickly, guys, too, another angle here to consider before we go is this going to be a big benefit for the U.S. airline stocks, Melissa? And I'll tell you why I say that, because a lot of business people aren't going to want to fly 13, 14, 15 hours from Dubai to JFK and not be on a laptop. They may choose to take a shorter flight to a connecting airline on a U.S. carrier where they can now use their device.
But the flight time might actually be longer.
It will. You're going to sacrifice time, but you've got your laptop and you can work.
Right. Retail is under pressure right now. How are they navigating business in a Trump world? We'll find out straight ahead. And the Dow down nearly 200 points. We are all over this market slide when Power Lunch returns.
We're working actually with a global agribusiness, and they operate in one of the emerging market countries that are at a high level of digitization. And we worked with this company to actually build analytic capabilities so that they could see and have visibility into what that government was doing with their data.
CNB
It is a new world for business leaders, obviously, under President Trump. Retailers, in particular, feeling uneasy. That border adjustment tax possibility looming large for many of them. Courtney Reagan spoke to several of those execs at the Shop Talk conference in Las Vegas, and she joins us now. Hi, Court.
Hi, Tyler. So there's a lot of conversation here about ways to make shopping better and easier. But what's been noticeably absent is talk about how government policy could change everything. So I have made sure to ask that question to the CEO of Kohl's, eBay, and Target. And Kohl's CEO Kevin Mansell said a border adjustment tax would make his tax rate grow to 80%.
The bigger issue to me, frankly, is the impact on prices for customers, because that's what drives demand. Over time, I'm sure we'll figure ways to navigate through higher tax rates. It's a bad thing for our P&L, for sure.
eBay CEO Devin Wenig says as an American CEO, he wants President Trump to succeed. But there are a number of issues that concern him.
Responsible immigration matters to us. Trade matters to us. And we're not going to be shy about those issues. And we're really trying to separate out the politics of Democrats and Republicans, which isn't important to us, from the issues which are critically important to us. Us and the rest of the tech industry have been vocal, and we will be, about issues that directly impact our business.
Target CEO Brian Cornell and I spoke on stage here during one of the keynote addresses, and he reiterated what he told us on Power Lunch previously, that his tax rate would swell to 75% if a border adjustment tax were passed, and prices for consumers would be noticeably higher. Back to you.
All right, Courtney Reagan, thank you. Time now for Street Talk, the analyst recommendations on the stocks you need to know about. And speaking of retail, the retail sector is
Funny how that
call.
works out.
Exactly. Credit Suisse downgrading the sector within the consumer discretionary sector to a market weight from overweight. CS had been overweight given the quote-unquote deep valuation in its models and the universal hatred of the sector on the buy and the sell sides. But now there's a new problem. Credit Suisse's earnings momentum indicator has fallen to post-financial crisis lows and showing no signs of stabilization. A further decline to the lows of 08 or 09 is more likely.
They're that negative?
Yes.
Wow. On an entire sector. I got nothing for that one. All right, second stock, I'll try to keep up. Akamai, Drexel Hamilton calling the company cool and clever and starts coverage with a buy rating and a $90 target. They say that recent revenue growth slowdown at Akamai is temporary and that it is, quote, at the intersection of massive growth in internet content. They call Akamai's global network unmatched with, get this, 230,000 servers.
Wow.
They say it's a good time to establish new positions in Akamai. They've got a $90 target. That is nearly 40% upside on AKAM.
An even better time considering it's down 3% today.
Yeah.
Third stock here, Apple, Bernstein boosting its price target by $20 to $160. Primary drivers of this change, better odds of low-cost repatriation and expansion of its services business and the coming iPhone 8. And, of course, interestingly, this call is coming on a day when there are some real questions about the ability of the Trump administration to accomplish its agenda, and most importantly, from an investor standpoint, tax reform.
Yeah, Apple's got more cash than anybody. All right, stock number 4. Couldn't find a good small cap call today, folks. I apologize. Kind of a mid-cap name. Motorola Solutions, MSI. Jefferies upgrades it to a buy from a hold. They boost the target by 33% to $100 from 75. They say the consensus estimates are simply too low and that the risk.
This hour, clouds of thick smoke rising over West Mosul earlier this morning. Iraqi commanders say they're closing in on Mosul's old city, just 500 yards from a famous mosque, where an ISIS leader, Abu Bakr al-Baghdadi, announced the caliphate in Iraq and Syria. Starting today, Tampa Bay residents will be able to order Costco groceries straight to their door through Shipt, an online grocery delivery service. Shipt plans to expand to 50 markets by the end of the year. Its members pay a $99 annual fee for unlimited deliveries. Philadelphia investigators are looking for 2 men who stole $1 million worth of jewelry. Surveillance footage capturing the 2 men entering the store through the ceiling. The robbers also cut a hole into a neighboring business to get in. Starbucks adding more gluten-free and vegan options to its menus, including its first gluten-free breakfast sandwich. The chain is also introducing a new vegan-friendly grain bagel. Both are available starting today. The gluten-free market is expected to grow at least 12% by the year 2021. Although some people say that Starbucks is a bit late to that game. A lot of competition. That's the news update at this hour. Melissa, back to you.
All right, thank you very much, Sue Herrera. Let's get a check on the markets here. Stocks are continuing to slide at this hour. On the S&P 500, 600. We're just a couple of points off of session lows right now. 2350 is the level. 2348 or so is the session low level. Russell 2000, which of course has been seen as the most sensitive to any possible tax reform, the biggest beneficiary. That sector is down by 2%. One bright spot in the markets, though, today. Chipotle, that stock is rallying after data research firm M Science did some channel checks, predicted first quarter sales will, quote unquote, easily beat Wall Street estimates, and that stock is up 2.2% right now.
President Trump on Capitol Hill today trying hard to close the deal on repealing Obamacare. The president reportedly warning Republicans they will lose House and Senate seats in 2018 if the health bill fails. Is the vote this Thursday something that could derail the president's agenda? That is the cloud that is looming large in the sky over the market today. Larry Kudlow is here. What would Reagan do?
You know, it's a great and important question.
Well, you gave it to me, so that's why I'm asking it.
You didn't have to say that. You know,
that is true.
Reagan was a deal maker.
That's a good question.
Trump is a deal maker. The House has to learn to be a deal maker, okay? It's like the GOP needs to practice bipartisanship with itself. And Reagan would say, he had two expressions. If we agree 70% of the time, we're not enemies or friends. Or he would say, give me half a loaf now and I'll get the other half later. And he made deals. Not every deal was fabulous. A lot of the deals on tax cuts.
The culture of Washington and the culture of the House is not that way anymore, is it?
Well,
I don't know whether there are enough people who say, if I agree with you 70% of the time, I'm your friend. There are an awful lot of people who say, if I don't agree with you 100%, I'm not going along.
You've been on Facebook also.
There is an attitude of that. By the way, Reagan, got 75 Democratic votes in the House, which was run by Tip O'Neill. Just put that in. That's how good a deal maker he was. But you're right. I mean, there's that attitude. I see Heritage Action and the Club for Growth is coming out. They want a nay vote in order to support the candidates. On the other hand, I think President Trump is right. If they don't get this done, they're going to be hurt next year. It's a key issue. I really am impressed with Trump rolling up his sleeves. He's meeting with all these people in the Roosevelt Room or the White House, and he's gone up to the Hill. He's not threatening them. He's just saying, look.
He's working it.
That's right. That's exactly right.
Some people might say, though, that he is coming to the table a little bit late, that he had been sort of lightly campaigning for health care, but not a full-throated campaign from the beginning, and that maybe it's hurt. You swoop in at the last minute. What do you expect here?
Well, I don't know. I mean, you sort of come in when it's hot, when the vote is approaching. He's been at it now, I think, a good 10 days with all these meetings. I give him a lot of credit. This is the Trump that gets things done. And
publicly, he says, we've got a great plan. It's going to be a great plan. It's
By the way,
better than what we have. I mean, is that enough for the American people?
It's really good. I mean, they got to sell this thing. I'll grant you that. But look, I mean, getting rid of the mandates and rolling back the taxes. By the way, the tax thing, they just loosened up. It's now going to be retroactive to January 2017 if it gets through. Mm-hmm. That includes the capital gains tax hike. That's very good.
It looks like they take it out.
Yes, the tax hike will be removed, right, the 3.8%. And the other thing is, Ryan is loosening up and making deals now, and that's a good thing. Before, he was a little too intransigent, in my view. I thought his first draft was good. I think some amendments would be very good. It's a long process, by the way. Look, I don't think they'll vote Thursday if they don't think they have the votes.
Well, somebody's got to whip it around, right?
That's right.
See what happens. So, a comment and a question for you. The comment is this. What you said about Reagan, give me a loaf now, I'll give you a loaf. That takes trust. That takes trust. You got to trust the guy's going to deliver the other half of the loaf. I don't know that exists. The question is this.
He's a Republican.
There's 535 men and women on Capitol Hill. We seem to only hear from about 10 or 20 in both houses. Do you believe, honestly, that sort of the fringe elements of Congress, not of America, not of Tea Party, not of progressive far left, of Congress, are controlling too much?
No, I don't know. I don't think so. Look, let's take the Freedom Caucus, okay? They're very good friends of mine. I mean, I've had Dave Bratt on the air. I've had Jim Jordan on the air many times. They're good guys. They have a point of view, and they're staying with it. Now, some of them can afford to do that because they come from very, very red districts. Others have to be more careful. John Faso from upstate New York, for example, there are a lot of moderates. You're going to run into that in the Senate. The Senate, by the way, let's not forget, if it gets through the House, you got to run through the Senate. It's not going to be that easy to do, as McConnell has already said. So this thing will take its.
But you said it. You said it. If we continue to segregate ourselves, you live among only rich liberals on Manhattan's Upper East Side, or you live among only staunch conservatives in Indiana, and all you're trying to do is please your constituency, which I understand. If your constituency are super hardliners,
listen,
then nobody's ever going to give anything.
Sully, I live among rich liberals in the Upper East Side.
I live among well-off liberals in New Jersey.
And you stand out, Larry.
I hold my principle. But no, look, this is the normal give and take, okay? And I think media likes to make a big deal about this. It's not as big as you think. What has to be done? By the way, some improvements were necessary. Let's not forget that.
Sure.
I mean, for example, should Medicaid have a work requirement? And for that matter, all the small entitlements particularly, yes, they should. We had that with Bill Clinton 20 years ago, and the whole thing was unraveled with Newt Gingrich on welfare measures. So I think some of these fellows are absolutely right. Should the tax credits be more generous to the low end and the aged? Yes, they absolutely should. And they needed to fix that. Now it's just a question of how quickly we can grease the wheels to get this done. Okay. Maybe they'll vote on it Thursday. Maybe they'll have to wait. I'm very optimistic.
Maybe they'll wait, so then maybe there won't be a vote on Thursday?
That's right. If they don't have the votes...
They're going to caucus around, and if they don't have it, they're not going to humiliate themselves by not having the
whips are reporting...
The market reaction will be very interesting. That's all I'll say. If there's no vote, because it's...
But then you buy it back, because it is going to pass. Trust me on this. Right. It is going to pass. And look, Trump and the whole GOP needs a W on this, big time. And
he's about the wins. He's about the W's.
He is. Yeah. That's what he lives for.
But he's on his ranch painting in Texas, so that doesn't help us. Larry Kudlow, thank you very much.
Different W.
Perfect. To the bond market. Rick Santelli, Larry, thank you. Tracking and we got a big move today in the bond market, Rick.
Yeah, I still say it was the dollar index that didn't put the flag up today, and instead maybe a bit of a white flag, actually. Look at intraday of 10s. Yeah, we're down about a handful of basis points. A year to date of 10s clearly shows we are toying with, a toppish formation. HYG, kind of the barometer on the ETF side. It looked like it had a nice bounce going. It reversed. Boons, what a different pattern. Now, maybe the Boons are just late to the party, or maybe there's something below that with regard to something's going to change. Maybe central banking in Europe, maybe Mario Draghi, maybe the euro's strength is really a harbinger of something we're just not fully grasping yet. And finally, the aforementioned dollar index. We'll start this chart in November 1st, because you can clearly see between where we're at in November is that little bottom on the last day of January, right around 99.50. Pay particularly close attention to that. And also notice, and I don't have the charts, that the euro and the dollar yen's doing real well as the euro. So it isn't only the euro. If you look at the pound, it's also strengthening, but not along the same lines as those other two currencies. Sully, back to you.
All right, Rick, thank you very much. Just a market alert, folks. We are now down once again over 1% on the S&P 500. Hit it earlier today. If we close below 1% on the S&P, it'll be the first close down more than 1% for that index since October 11th. Remember, folks, we went 64 days, a record, without a 1% move in the S&P 500. We've got it today. The Dow is down 201 points. A lot more in your markets when Power Lunch returns.
We're working actually with a global agribusiness, and they operate
food services management at Universal Studios. Now he picks up odd jobs as a background actor, not for the income.
I get bored.
His biggest role? That scene with Cameron Diaz, which paid around $600.
The car made $35 a day.
What was your car?
My car, yeah, she washed my car. I didn't wash my car for about 2 months after that.
And now I am live at the Mizell Senior Center in Palm Springs, where they are Wii bowling champs for 2 years running. Earlier, I was in a fitness over 50 class. Good thing, because according to the survey, more than half of us think we're going to live to at least 85. A quarter of us think at least 95. So we better prepare financially, guys. Back to you.
All right. Thank you, Jane Wells.
Jane, does Jane know where Richard Simmons is, by the way?
I don't think anybody does.
Where he is?
He's fine. He's at home. The LAPD says he's at home, and he is. They've met with him for 90 minutes. He is fine.
Thanks
actually
for the
does.
update.
I don't know if he's still rocking to the oldies, but he's fine.
Never doubt Jane Wells. She knows everything. Thank you.
Thanks, Jane.
Percent or more decline for the overall indexes in many months. In fact, you got to go all the way back to early October to see a decline of this magnitude. The Dow is down 221 points. Only a couple names. Really, the defensive type stocks are higher today. Over 400 of the S&P 500 are down. That index down 1% as well. The bond market making a pretty big move. We're seeing a move in the 10-year Treasury yield. It has now fallen back down as well to 2.42%. That's a nearly 2% move there. In fact, the only thing that's up significantly is what you might expect. Gold. The gold contract is up 1.1%, Melissa.
Highest level since March 2nd. Let's take a check on Snap shares right now. And here's something we haven't been able to say for Snap's basic lifetime. It's doing better than the overall markets here. Snap is only down by 0.1% versus the sell-off that we're seeing in the NASDAQ right now. For more on how Snap has impacted all the unicorns out there hoping to go public, let's bring in Dalton Caldwell, partner at Y Combinator. Dalton, great to have you with us.
It's great to be here. Thanks for having me.
Is Snap viewed positively or negatively in the startup world in terms of being the example, being the hope for these unicorns?
You know, I think Snap is viewed positively. It's seen a little bit of an outsider. They're based in Los Angeles, and so we don't see it exactly as a standard Silicon Valley company. But the fact that they were able to go public as well as they did with not a ton of revenue and still do as well, I think is a really good sign for startups in general.
Are you throwing some shade at Snap for being based in LA and not much revenue there? That's what it sounded like, Dalton.
You know, I read the S1. It's pretty good. Usually we would want to see someone with more historical revenue and more of a ramp before they go out. They went public a little bit earlier than you would normally see, but it makes sense given all the competition from Facebook. So it was time for them to go out. Now they have a lot of cash. They're in good shape.
So if you were an advisor to Snap in any way or an investor, you would have said not to go public yet?
Oh, no, I'm saying they took the least worst decision in this case. They have a lot of competition from Facebook. Facebook is cloning every one of their features right now via Instagram. And so they were able to go public, they were able to get the cash, and now they're in a really good position to be in this battle with Facebook on a feature-by-feature basis. So, you know, it was a tough choice, but I think it was the right one for them, and it worked.
Dalton, it's Brian Sullivan. Two questions. What the hell is going on at Uber? And why do you think the valuation has not come down in the private markets given this massive, all the scandal and executive turnover?
Yeah, it's been rough. The thing with Uber is you don't actually change the valuation until you raise additional financing.
Nightly Business Report.
All right, everybody, welcome to the second hour of Power Lunch. A busy day in the markets, folks. Along with Melissa and Brian, I'm Tyler Matheson. 2 hours until the closing bell, and here is what we're watching, and watching a lot. Drama in D.C. hitting Wall Street just a bit. Markets sliding on concerns about health. That health care bill, stocks suffering their biggest losses so far of 2017. Down 202 points on the Dow, better than a 1% slide for the S&P 500, almost that for the Dow. We haven't seen those kinds of moves in months. Well, the losses are right where these be the biggest drop since before the election, by the way, if we end at these levels. Financials really getting hit hard. The XLF, the financials ETF, having their worst day since last June. Plus, IBM CEO Ginny Rometty will join us. Her first interview since meeting with President Trump just a few days ago. Been to the White House several times since the election and inauguration. Trumponomics and her plan to drive growth at Big Blue.
Let's take a deeper dive into today's drop. The Dow and S&P 500 on track for their biggest decline since October 11th. A wild ride today for the Nasdaq. It hit record highs earlier in the session, but now the biggest loser of the three major indices. Check out some of the major movers here. Insight, Tractor Supply, Tesla weighing on the Nasdaq 100. Biogen leading the index. More on what is driving that stock higher in just a moment. Meantime, Caterpillar, Goldman Sachs, JP Morgan, and Boeing leading the Dow lower. Small caps, we should note, also taking on the chin. The Russell 2000 down about 2% right now.
All right, Bob Pisani is down at the New York Stock Exchange. And Bob, a question to you as we go, which is, the D.C. drama is big. It is certainly an impactful thing. But as a trader pointed out, Ally Financial, a big lender, also making some concerning comments about loan delinquencies, which he said have spooked some people as well. That might be hitting the financials. What are the traders saying? Is it all D.C. or something else?
No, you just brought up an important point. There is an aspect of this that relates to fundamental weakness. So there are three components, and thank you for bringing that up, Brian. There are three components to why we are down today. Let me list them for you. Number one is continuing fallout from the FOMC, the dovishness. The dollar and the bond market, bond yields dropped on the FOMC meeting, and they've continued to drop. That's follow through. Number two, we've talked about anxiety over the Trump agenda, a lot riding on Thursday's vote in the House of Representatives, repealing Obamacare. But then there's the third part, which Brian alluded to. We've seen some fundamental weakness and some commentary in the autos. And remember, energy, we're at lows for the year. In oil here, that's a fundamental weakness independently of the other two issues that are going on. We're seeing some heavy volume today. We haven't seen in a long time. Some of these ETFs, the bank and the retail ETF, the transports, the Russell ETF, the semiconductor ETF, all much, much heavier volume than we've seen in a long time. And we're seeing some 52-week lows. This border adjustment tax thing, it does not go away, and you could see it in the retailers, 52-week lows. Target, Bed Bath & Beyond, Macy's, Under Armour, all there. Then we get to the auto lenders part. This is Brian's reference here. Ally making disappointing guidance for the year overall here. One culprit. Used car prices are declining a bit. That's an issue for them. GM and Ford is down. I noted last week on Friday, Santander Consumer, auto loan lender, uptick in loan delinquencies for them. So a little bit of fundamental issues. And then, of course, you see the energy stocks, new lows, almost new lows for the year in oil. There we are, crude down. And, of course, all your big high beta names, your Marathons, your Chesapeake, Southwestern, Devon, all down 3-4% today, as you can see. So a mix of issues there, guys, affecting the markets.
It's a lot of stuff. And healthcare, Bob, down 0.8%, actually less than the rest of the market. So there definitely is other stuff going on. Bob Pisani, thank you very much.
Okay.
The financials, by far and away, the worst performing sector today. It is down 2.7% as a group, but there's a lot more to talk about. Dominic Chu here with that.
Near their session lows right now. Traders focusing a lot on those financials, and for good reason. If you check out these two bank-related ETFs, and Bob mentioned them before, we're talking about the Spider Bank ETF, also the Spider Regional Bank ETF, both having their worst day since the Brexit lows in June 27th of last year. And among the biggest decliners, you've got the big names, Bank of America, Wells Fargo, JP Morgan, and the regional side, PNC. Branch Banking and Trust, BB&T, SunTrust, lagging the regionals on that side of things. One name looking for a bit of a bounce tomorrow. However, check out maybe shares of Bank of America. Our data partners over at Kensho say that since 2010, after Bank of America stock closes down between 5 and 6%, the following day it trades positively 71% of the time, average return about 1% or so. So statistics, obviously, very difficult in this kind of environment, but still, Melissa, I should note out that KRE, the regional bank ETF, trading almost 19 million shares. On average, it trades on a full day, 7.5 million.
And XLF is seeing double its daily average volume right now, Dom. So very heavy volume trading here. Thank you, Dom Chu. Let's get more detail on the sell-off in the banks with Jeffrey Hart, principal at Sandler O'Neill. Jeff, great to have you with us. Were you in the camp? Because you got a lot of people today saying, you know what, the banks are selling off because they're simply overvalued. Where do you stand on valuation in the banks?
You know, I don't think they are overvalued.
So what's going on?
I mean, banks have led the way up, and I think anytime you have a chart going way up to the right, that usually implies there's some volatility ahead. Some of the drivers of that, higher interest rates. So that took a bit of a kick with the 10-year dropping below its 30-day moving average. Regulatory reform, that's going to take a while to show up, and tax reform, that's going to be, appears, a second priority after health care. So, I mean, I think just the timing of that is weighing on them some. I don't think we're done here as far as where the banks are. I think we really have had a sea change in Washington, and it's a good environment for banks. I also don't necessarily think you need to rush in today. It's going to be kind of volatile. What we need to see is some hard economic number support. For instance, they'd like to see loan growth accelerate again at the banks. The tone out there is that will happen. We'd like to actually kind of see that play out. And there's some hints at credit here or there, but I mean, really, when we look across, whether it's auto, mortgage, credit card, commercial, credit indicators all still look really good to me.
Sure. I want to ask you, though, on that credit, because it just sounds like you're citing sort of a reality check of investors at this point when it comes to tax reform and deregulation. When it comes to auto lending specifically, you know, Bob had mentioned this Ally Financial presentation. This is just the latest in a string of data coming out of the used auto market and auto lending, indicating that there could be some trouble ahead because used car prices are declining. Usually new car prices follow, and that means the yields, the auto lease yields, are not going to be as attractive. Are there some banks that might see the most exposure from their lending in the auto sector, and is that at all a concern that's popping up on your radar now?
Well, it's certainly something that pops up, and you almost got to look kind of bank by bank to see where they might have stuck their neck out too far on auto lending. I mean, when I look at the big banks I cover, I'm not too concerned. That kind of they've been somewhat selective in the loans they've made. But at the end of the day, the thing that matters, I think, for auto loan credit quality is if people have jobs. If they have jobs, they need to get to their jobs. The vast majority of Americans drive to their jobs. As long as employment holds up, I mean, we'll see some ebb and flow in auto credit, but I don't think we're anything near what would be a significant turn in auto credit. And even if we were, let's not forget, auto loans are not the mortgage market. This is by no means a look back at the financial crisis.
All right, Jeff, thank you. Jeff Hart, Sandler O'Neill.
It's not just the financials. Retail also getting hit hard. The XRT down nearly 2% today. Let's talk about that and more with Brian Belsky, Chief Investment Strategist with BMO Capital Markets, and also with us, CNBC contributor Ron Insana. Mr. Belsky, you get to go first because you waited patiently all day yesterday for a segment that never aired because we had hearings and then we went to Mr. Spicer and so forth. You'll indulge us, won't you, Ron?
Absolutely.
You absolutely will. What was the dog whistle that went off overnight, Brian?
Well, I think, Tyler, the issue with the market is whenever we have stocks and the primary investment strategy that is momentum by investors, we're going to have days like these. And for all intents and purposes, stocks in America have been fueled by confidence, not necessarily data, real hard data yet. And, you know, when we start to see some negative headlines, people are going to take their profits. So, again, as Brian pointed out in the prior block, this is the first 1+% day since October 11th. This is the actual date, by the way. And we never like to see people lose money, Tyler. Let's be very clear. But at the end of the day, stocks are rarely linear for long, and it's been very healthy to see this type of a pullback. And remember, I've called this the Chicken Little correction, right? Everyone's been calling for a correction every day. Now they have it. So, I mean, this is pretty healthy for the market today.
Ron, weigh in here. Is it as simple as not necessarily simple, but Brian's point is nuanced there, but that confidence began to wobble a little bit over the last week, and maybe most especially yesterday, which was probably not a good day for the Trump administration.
It wasn't, and aside from the Comey hearings, there's also the risk that health care reform does not pass as planned. And within that, and I think it's important to note, is the reduction in the capital gains surtax, which if health care reform package that is currently in front of Congress does not pass, that capital gains surtax of 3.8% remains in place. That's important to the stock market, and I think that might be the thing that they're keying off of. Also, the sequencing of President Trump's initiatives and the GOP's initiatives in Congress, if health care reform is delayed, is called into question. So those positives that people were betting on could be pushed off.
You know, Ron, I don't want to take away coverage from D.C. I understand it's important. I understand it's a big deal, and it's sort of thematic today. But I also, in addition to the Ally Financial comments, also need to remind our audience that oil continues to slide. Oil is below, I think it's 200-day moving average. Many oil stocks, I'm looking at them here, are down 10, 15% over the last 30 days. Remember the last time oil took a big turn down, the markets were a little wobbly. I can't assign all of this to D.C., can you?
No, of course not. No, absolutely not. And oil is still a supply story. Fracking is now increasing at a pace faster than we saw on the last upturn in oil shale exploration in the United States. And listen, there are other things. S&P earnings now are being downgraded rather than upgraded with respect to expectations. I'm looking at some weird things overseas. Overnight interbank lending rates in China spiked rather dramatically overnight. Loan growth in India has fallen off a cliff. So there are a lot of things to look at. And I think D.C., first and foremost, both with respect to the Comey hearings and with policy implications of health care being called into question, are overriding factors. But there are other things going on inside the market.
Brian, where would you put money right now? I mean, let's not forget that NASDAQ set a record earlier today.
No, I mean, I think the bull market is very much alive. I think Brian actually brought up an excellent point with respect to energy. You have to remember that commodities, emerging markets, anything non-U.S. was really the driving force with respect to investments the last 10 or 15 years, and investors just can't let it go, man. They can't let it go. And so we've heard some talk and answered a lot of questions about this quote-unquote reflation trade going on around the world. I know China's up year to date, but China's still underperforming since the election, number one. Number two, oil prices are down. Gold prices are down year to date. We're not seeing an inflation trade. I think there's still way too much focus on energy where inventories are still high. That is not going to be the place to be. We still think the place to be, quite frankly, is North American stocks, and days like these afford a disciplined investor with better entry points to buy their favorite names.
Gentlemen, thank you very much. Brian Belsky of BMO and Ron Insana, thanks very much.
Well, Biogen is one stock bucking today's downtrend for most of the day, but barely in the green right now. Meanwhile, the IBB Biotech ETF on pace for its worst day in 2 months. Meg Terrell joins us now to explain what is boosting Biogen specifically. Hi, Meg.
Hi, guys. So we did see Biogen up a bit more earlier in the day, though it is kind of losing some of those gains along with the broader biotech tape. But really the story today is Biogen has won a big patent decision. Remember a couple years ago we used to talk about Kyle Bass and his Coalition for Affordable Drugs. This was a strategy that Bass was employing to try to challenge the patents under a lot of big drugs and often short those drug makers. We haven't heard a lot about this in the last couple years, but Biogen has just prevailed in one of those challenges. This is around its big multiple sclerosis drug Tecfidera. It's a $4 billion a year drug. Analysts said that if they had lost this, they potentially could have lost patent protection as soon as 2020 around that drug. So this is a very important decision here. This is the second recent decision for Kyle Bass in this area. A couple weeks ago, Accorda also came out on top in a patent case here. So that's why Biogen is up today. They still will have another patent case to duke out with Forward Pharma. So people are still watching Biogen's IP around Tecfidera right now.
You know what's funny, Meg, is that in today's session, we're taking a look at a broader market that's really selling off the Trump trades very hard. The trades that really were rising on the notion that Donald Trump was going to get through his agenda. And just last night at his rally in Kentucky, he said once health care reform is done and Obamacare has been repealed, it'll be time to get to work on medicine, bringing down the cost of medicine.